Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes crazy world of corporate filings. Today we're diving into a Form 8K filed by Zeo Energy Corp. Think of this as the company sending out an we messed up message to the SEC. Let's see what happened. The report is dated April 17, 2025. This is important because it tells us when the event that triggered the filing actually happened. This Form 8K filing is like a corporate UPOS note. Companies use it to quickly tell investors about big, unexpected things that could affect their stock. Scroll item 3.01 notice of delisting or failure to satisfy a continued co-listing rule or standard. Transfer of listing scroll. The big issue here is that Zeo Energy got a letter from Nasdaq, the stock exchange, saying they aren't following the rules. It is not a good look if you do not follow the rules. Specifically, they didn't file their annual report known as a 10K on time. The report was due March 31, 2025, but it was not filed. It is like not showing up to class. Good news is there is no immediate impact. If they get their act together quickly, they can avoid any serious issues. Zeo Energy has until June 16th, 2025 to tell Nasdaq how they plan to fix this. If Nasdaq likes their plan, they might get until October 13, 2025 to actually file the missing report. But there's a big maybe here. Nasdaq might not accept their plan, or Zeo Energy might not be able to meet the October deadline. This could lead to their stock being delisted, which means it would no longer be traded on the Nasdaq exchange. That's definitely something investors don't want to see. The company says they're working to file the report as quickly as possible. That's what investors want to hear. This section is all about making sure everyone gets the same information at the same time. The company issued a press release so everyone knew about the Nasdaq letter. The press release about the late filing is attached as an exhibit. This section just lists the exhibits that are included with the report. Here's the press release. It's basically a more public version of what's in the 8K filing. .k, let's step back and look at the bigger picture. What does all this mean? Well, a late filing is rarely a good sign. It can signal deeper problems within the company. Maybe they have accounting issues, management problems, or simply not enough resources. Whatever the reason, it creates uncertainty for investors. On the other hand, sometimes things happen. Maybe there was an unexpected event that caused the delay. The important thing is how the company responds. Are they transparent? Do they communicate effectively? And do they have a solid plan to get back on track? Let's be clear, a late filing can damage a company's reputation and potentially lower its stock price. Investors might lose confidence and the company could face increased scrutiny from regulators and auditors. Right now, the stock is still trading, but if Zeo Energy doesn't get its act together, they could find themselves in serious trouble. So what's my take on Zeo Energy? I'd say there is a red flag when it comes to the management and operations side. A company needs to file these documents on time as expected. In this case, the company missed a crucial deadline for filing its financial report and it now has to come up with a plan to show how it will fix this. There is no assurance that Nasdaq will accept the company's plan to regain compliance as an investor. I would be very wary of this and think twice before making an investment. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more Corporate Decoder insights.